Hello again. Whether you arrive in Oslo by car, boat or train, you cannot help to notice that the face of the city is being transformed by ambitious building projects. And whilst this is slightly unusual for Norway, this is a common scene in China. And I've been speaking to Ole Andre Kjennerud about the world's second largest economy. Does the change in Chinese leadership actually mean anything for Chinese economic or monetary policy?
Well, I think it means everything, actually. If you look at the past leaders, when Deng Xiaoping took over after Mao, it meant a lot to where the economy was headed. After Mao, after Deng as well, you saw that Jiang also continued on that path that Deng had started, liberalizing the economy, freeing up important sectors. And then Hu Jintao has also continued to develop on that economy. The current leaders will mean a lot to the economic development going forward the next 10 years in terms of whether they will improve stability on one side or reform the economy on the other side. I think that they're going to weigh these two options against each other. Is
there any signs what they're likely to do? Because lots of people say that, for example, the banking sector is much too close to the government.
Well, that's probably true. And there are signs that they are willing to let go a bit. But I'm also quite skeptical whether they're going to free up too much. What we see in companies is that they have these contacts in every company so that they can have this insurance policy, whether or if the economy breaks down or if the economy slows too much, they can implement new policies and also get the private sector on these new policies. So I don't think that they're going to let go too much, but we see some signs of more liberal attitude.
We've seen Chinese growth slow down recently. At the same time, the Fed, the Bank of Japan and the ECB have taken quite aggressive actions in their territories. Are you surprised that the central bank in China hasn't done more?
I have been a bit surprised. I had expected that they would cut rates a bit more than what we've seen the last 6 to 8 months. I had expected another cut. Instead, they have continued to increase liquidity by using more short-term measures. I think that this is a way for them to kind of increase liquidity without boosting lending too much, such as they did during the financial crisis. They are obviously nervous about what will happen to the economy if they increase lending too much in the economy.
Is it they're nervous about inflation?
Nervous about inflation is one thing, nervous about a hard landing is another thing.
I was reading from your monthly China report that the Chinese government has brought forward some big capital projects worth 1.6% of GDP. Isn't there a danger that this Keynesian economics gone mad and they're spending too much money on these big infrastructure projects?
I think so. I think that there is in certain sectors, in certain areas of the economy, you see signs that these projects are not driven by actual demand, that there is a misalignment between supply and demand. But on a broad macroeconomic scale, these actual projects wouldn't necessarily bring the economy out of hand. But on a more local basis, I think it's a danger, and I think it's a danger for banks who are loaning this money to contractors or to local governments, for example.
What about the health of the banking sector? Is that on a solid footing?
A lot of spectators say that it's not, that there are huge loans or huge values that they have to undertake as non-performing loans eventually. But all the banks in China also have the state in the background. So if anything goes bad, you always have the government who can help you. And they have shown before that they are willing to do that, for example, in the 90s.
And what about the housing sector? About a year ago, there was lots of concerns that the housing sector was on the verge of blowing up, that it was overheated. But the government seems to have done a solid job in reining that back in.
I think there's still a lot of concern about the housing sector. I don't think we're finished with slowing it down. I think that the government will continue to hold on to these policies which are reducing demand, especially speculative demand. So I don't think that we will see some liberalization in the housing sector going forward, especially in the next couple of years. There are a lot of inventories, unsold properties, so many businesses in some areas of the country will continue to struggle.
And what about the export sector? The export sector obviously is being hit hard by what's going on globally, so the outlook there can't be that strong either.
No, I don't think so. I expect exports to grow by less than 10% next year. They're going to grow by less than 10% this year. We're going to have weakness in the export sector going forward. So given what you're saying, that the export sector is not performing particularly strongly, the housing sector is likely to underperform going forward, then doesn't that mean that we haven't seen the end of the reduction in GDP growth? That's true. I expect growth to actually slow down next year. I expect somewhere between 7.4 to 7.6%, down from 7.7 to 7.8% this year.
Well, some really interesting analysis there. Still this week, I'll be speaking to more of the region's biggest banks and hedge funds. But from Oslo, goodbye for now.